Welcome back. Well, let's get discussing one particular stock within the pharmaceutical space, which is largely a company which manufactures and sells to the rest of the world market. 90% of their sales from the likes of Latin America, Central America, and we gets around 10% of sales from the US. Caplin Point. The stock is up 5% today. If you look at it on a year-to-date basis, it's been a rank outperformer. It's up close to 60% this year itself. And if you look at a two-year chart of the company, it's gained around 150%. To talk more about it, we have Vivek Siddharth, the COO of the company, joining in now. Vivek, hi, welcome to the show. Well, we didn't really speak to you post your Q2 numbers, so I just wanted to touch base with regards to the margins, because y'all had mentioned that y'all were struggling with higher freight costs in the previous quarter, and there were delays in terms of transit as well. How is that doing currently, especially with fears of the new variant? And do you think you can sustain these margins of over 30%?
Yeah, so for our business model, which is basically stocking and sale at the destination, we are one of the last ones to get affected with regards to the freight and larger transit times. However, I think over the last 12 odd months, this has almost become the norm. So we need to live with it, and this is not it's beyond anyone's control at this point. So we need to make sure that we try and pass on as much of the costs to the final consumer, unfortunately, at this point. When it comes to the new variant, I think it's too early to tell right now. One good thing is in most of the markets where we're operating in, things have been back to normal. Our business is, back to usual, and we don't see as yet any sort of an impact. But even if there is any impact, I think, pharma companies, as you might have seen in the last couple of years or so, probably one of the smaller ones to get impacted, I believe.
Okay. I just wanted to touch base a little bit on the US business, because that's around 10% of your sales. Have you started opthal products or eye products within the US, or is it just limited to injectables? And what is the pipeline looking like?
Yeah. So the good news is that we've actually gotten our first ophthalmic product approved. This is through a customer of ours that had triggered. Actually, we got the approval without an audit happening. So that goes to show that we've got an excellent compliance record, and I believe we are due in for an inspection. We don't know when exactly that's going to happen. I think most of the inspections are mission critical at this point. Having said that, when it comes to our overall portfolio, I would say it's still 80-85% focused on injectables. Ophthalmics is probably, I would say, an add-on at this point, but we also do have some very interesting products of the overall pipeline when it comes to ophthalmics.
Okay, interesting that you received an approval without an audit for something which is a complex product. So congratulations on that. But Siddharth, you also have a significant amount of cash in books, around 560 odd crores. What's the plan in terms of utilization? Anything that you've probably narrowed in on when it comes to even inorganic initiatives?
Yeah, so we are taking on our next wave of CapEx projects. We are getting into oncology. This is a space where we've not been present in the last few years. We'd like to think that we've got a very good platform that we've built up over the last few years in ROW markets, rest of the world markets, where we can potentially add on our oncology range as well. We are also getting into backward integration on API. We tried an inorganic route for an opportunity, but that fell through at the last minute because the company that was selling had a very large approval out of that plant, and it didn't happen eventually. So we are doing it on our own. We're doing a greenfield project in API. We are also expanding our capacities in our injectable plant by a big mile. So that is going to be the next capex that we've taken on. So while it is true that we have 560 crore of reserves on our books, but we want to be able to fund all our capex internally and not go to the banks for anything like that. And if and when some sort of an inorganic opportunity comes up that sort of fits in with our vision on growth, we are not averse to it. We will certainly look at that as well.
Okay, just a quick last question, Vivek. What is the eventual plan with the US business? You're targeting around $100 million in terms of revenue in the next 5 odd years. Does that still stand? And do you have any plans to probably hive off the US business, make it a separate arm?
Yeah, so it's already a subsidiary of Caplin. We own about 75%, and the other 25% is through our investment partners, Fidelity. So all options are on the table at this point. We remain extremely bullish on the US business. Many of the backward integration initiatives that we're taking on is focused towards augmenting our progress in the US. Now, all options are on the table when it comes to what we are going to do with it, let's say 5-6 years down the line. It could be a secondary, it could be a buyback, it could very well be an IPO as well, but it all depends on how the business is doing at that point in coordination with what the overall market opportunities look like. But like I said, all options are on the table at this point.
Okay. All right, Siddharth, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Caplin Point. Time for a quick break. On the other side,